I want to talk a little bit now about W.D. Gann. Again, the reason why I want to talk about Gann is because I want to show you what I think, on a scientific basis at least, where we are in the cycles and what I think is coming next, and perhaps you can see it yourself about, so that you can eventually decide for yourself what's coming next. W.D. Gann was a stock market trader. Started life in about 1903, 1904 at Wall Street. Made a lot of money in markets, but his methods were somewhat unorthodox. They're still challenged today, but he did have quite a significant belief that markets moved in cycles. And one of the things that he's not that well known for, although a few people have seen it, is his financial timetable, which describes his theory of what he thought was an exact 18.6-year rhythm in the economy. Now, the financial timetable you have in front of you was published by Gann in 1909. What drew me to this financial timetable was when I was researching a whole heap of real estate stuff. You'll see down the bottom there where he's got quite a number of years with the letter K behind the years. So you have 1804, 1822, 1841, 1859, 1878, 1896, 1915, 1933 and so on. They were the years, if you check back in history, of really severe, you couldn't call them anything else. They were severe economic depressions. A lot of people out of work in those years. Now, of course, when I went through and researched my book, I could see, okay, well, there must be something. There seems to be something in there because Gann had those years. Well, this financial timetable had those years correct. I backed it up with all my research. The interesting thing from my point of view was, after 1909, this document, from Gann's point of view, was a forecast. And since we're now 100 years after that, or at least 90 years when I got hold of it, you got the chance to test some of the things. So that's what I want to show you just now, and the reason why we do that will become evident in a couple of minutes. You can see there, if you have a look at the legend, A, B, C, D, and so forth, the column I want to deal with, I've highlighted for you. We're going down from 1914 down to 1933, and I have up here on the overhead a chart of that particular time. It is a chart of the Dow Jones Industrial Cash Market, and we are running from 1911 to about 1935, the beginning of 1936, to try and give you a visual representation of the market as it looked then. Now you can see immediately it looks very similar to what our All Ordinaries Index looks like, or sort of looked like up until a little while ago. You should also note, for those people again standing in front of you, as soon as the market breaks into all-time new highs, up through 1919 and past, 1924, the market then always goes for a big bull run, which is what happened in the 1920s. That's standard Gann procedure. But anyway, to bring it back to what we're talking about, remember, published first in 1909, so what we're about to do from Gann's point of view, a forecast. And you can see that Gann suggested 1915 would be years of extreme low stock prices, strikes, repression, despair, and the beginning of a new business generation for the next 18 and 3/5 years. Not a bad call. December actually of 1914 the market was closed. That was the outbreak of war. 1915 the low. Going forward from there, Gann suggested 1919 would see high stock prices. Good call. 1919 high stock prices. He said that 10 years in advance. You then had 1921, Gann suggested, possibly see a panic. 1921 was the end of recession after the war. 1922, low stock prices. Well, 21, 22, that's fair enough. 1924, back to the legend Gann gives, E, high stock prices. 1924, back to high stock prices. He then suggested 1925 gives F a panic. Well, within the context of the day, very early 1926, the Dow certainly dropped there. Sort of a panic. 1927, G, low stock prices. Well, you'd have to call that wrong. Up through there, certainly markets kept going higher. But he did suggest, by the time he got to 1928, very high stock prices, the most prosperous year, waste, over extravagance, most money in circulation, and much speculation. By any means, you'd have to say that's a reasonable forecast. Would you agree? Now, Gann believed, with his theory of all the cycles that he was doing, he didn't think the markets were random. He came to believe history repeats, and it repeats in set time frames, which, if you have enough data looking backwards, you can forecast as far in the future as you want to go. That's what he was talking about. The importance why I wanted to display that now is, first up, we had a real estate cycle, which I think we've seen the back of, or the end of that cycle now. We've seen the panic lows. We have Gann's 18.6 year cycle. 2009 would see the lows. He did that 100 years ago. After you get the lows, you should see 4 years of slowly rising stock market prices. Doesn't mean you get a boom. It's just that over the course of the next 3 or 4 years, the lows in the market keep lifting. Now, we're talking about the US there, but other markets will follow that, leading to, if you see the time I've got there in the article, to about 2013, which will repeat Gann's other timing aspects. You should see higher prices.